Hey guys, Tim Melvin coming to you from down here once again in Central Florida. Gorgeous day out there. Was out walking the dog earlier. It was only a crisp 85 degrees at 7 o'clock this morning. So it's going to be another scorcher down here, but hey, that's why we live here. And the markets are still struggling with the whole trade war and tariffs, and we're firing back and forth with the EU and certainly with China, and it's going to get worse before it gets better, in my opinion. Wilbur Ross came out and said that there was no low level in the stock market that would change the Trump administration's trade policies, and folks aren't taking to that too kindly. The stock market has gotten very used to, over the years, being placated by various government agencies if they dare to drop more than a couple of percentage points. Doesn't look like this administration is going to be swayed by the market's opinion of what's going on in the world. So the market, we're now just up 1.26% for the year in the S&P 500. Is that the correct number? 1.66 in the S&P 500. I'm sorry, we meant to say we were down 1.26% over the last week, and it looks like we're trying to be down again today. People, trade is certainly a factor. Fear of high interest rates is working in there. The article in the Wall Street Journal today that is, even as the economy accelerates, people worry about a pullback. So that's why we try not to spend too terribly much time worrying about what the economy is going to do. We've got ourselves positioned for win-win buy in the portfolio. We like the way we look. We are trouncing that 1.66% return. We are almost at 5% for the year in the main portfolio, in spite of the almost 40% cash position we're currently carrying. We still have a tail hedge in place. We like where we are going into the second half of 2018. Let's see. Okay. Speaking of the second half of 2018, FIG Partners came out with their look at bank M&A for so far this year. So far this year looks almost exactly like last year. Now, we hope so. We've had 7 deals this year. We had a total of 15 last year. So we'd love to see another 7 or 8 deals in the portfolio, at least over the back half of the year. We've got 129 deals this year, 130 last year. We are seeing more big deals of banks over $500 million in market cap. That's going to pick up even more now that the SIFI restraints are gone from a lot of banks, as that limit went from $50 billion of assets all the way up to $250 billion. That brought a lot of both buyers and sellers back into the M&A marketplace. Fifth Third has already made the first move, acquiring MB Bancorp in Chicago. So I think we'll see a lot more big bank M&A, but that's going to drive down to small bank M&A as well. So I look forward to a very successful second half of the year. Now, interesting, most of the deals that we've seen, 67% of the activity to be exact, has been in either the Midwest or the Southeastern regions, not up in the Mid-Atlantic or the Northeast, and shockingly, not on the West Coast. Now, I say shockingly because the West Coast is actually where we're seeing the highest premiums. Average premium for a deal so far this year is 174% of tangible book, a real nice level compared to the, say, 110% back when we started this thing in 2013, but still not near those nosebleed levels where every deal was done at 2.5, and you were seeing deals at 3 times book that occurred in 2007. In the Western region, we are seeing that 200% of tangible book value as an average premium being paid in a takeover. FIG last week did kind of a look at that Western market and what were the best markets for potential M&A activity based on things like core deposits, because buying deposits is very big right now. And according to FIG, the hot markets, or the most attractive markets, are San Francisco Bay Area, the Inland Empire region, and San Diego. Now, they said that the LA area is the least attractive because relatively low core deposits and very high deposit rates compared to the rest of the state. I find that interesting, and while I agree that on those metrics it might not be the most attractive, it is one very crowded market, and we've been kind of scouring. We think M&A activity in the Western region is lower than it should be. We look for more to come. So we're looking at the whole Western region, but I really do like the whole Los Angeles area as a potential hotbed of takeover activity. Just a little bit more favorable pricing. We've got a couple banks on the list where we'd love to get involved with out there. So looking for more M&A in the second half of the year. Now, I almost didn't do a video today because, to be honest with you, while the news is very newsy, when it comes to banks and small banks, there's not a lot going on. We had the stress test last week. All the big banks passed. Only Morgan Stanley and Goldman Sachs are not allowed to increase their shareholder payouts. Everybody else is going to be increasing dividends, announcing larger buybacks. Goldman and Morgan have to pretty much stay with the hand that they've got. But everybody passed. As we talked about last week, in the extreme scenario, we went from about 12.3% total equity capital down to 7.9%, which is more than most banks had going into the credit crisis. So the U.S. banking industry is in pretty good shape. Earnings season's getting ready to start, so that'll give us some more to talk about. But this week, not a lot going on. There's a holiday in the middle, 4th of July, one of my favorite holidays. You're going to have baseball. You're going to have hamburgers on the grill. There might be some cold adult beverages in there. But it's also a good time to stop and remember, folks, those of us here in the United States, and that's almost all of our subscriber base, being as we deal in small U.S. community banks, we live in a pretty amazing country. It's hard to remember that sometimes when you're watching the news. But, this year I've been to the New York City area, the Chicago area frequently because of the granddaughter, of course. Going up to Baltimore quite a bit because we've got some business stuff going on there. We've been out to the hill country of Texas. We run all over the state of Florida with a marked preference for the West Coast, heading over here to Captiva for a family vacation in a few weeks. And as you run around the country, it's an amazing country. It is full of innovative, ambitious people. It's also full of very generous and very kind people. And that's not everybody. There's idiots everywhere you go. But on balance, I think Americans are some of the more generous people that I've run into in my travels. So it's a fantastic country. And as Warren Buffett said, our best days may very well still be ahead of us, as long as we don't let excessive government intervention and incredibly divisive party politics stop us. So my one suggestion to you on the 4th of July is pop that cold beer, and remember, if you cannot discuss politics without raising your voice, you may be part of the problem. Happy 4th of July, everybody. Happy 242nd birthday to the United States of America. I would also suggest that this is an excellent time to not only for you, but for your kids to go back and read the biographies of some of our founding fathers and see what this thing was supposed to be all about in the first place. So, moving along to reading list. The big news this week, new James Swain book out. James Swain wrote a whole bunch of crime mysteries set primarily around casinos in the Atlantic City area, in the boardwalk, the whole crime family thing. They were fantastic. If you've never read them, go get them and read them. But he's got a new one coming out, introducing a new character. I just got it on my Amazon first package last night. I'm going to start on that today. I finished Merchants of Debt, the story of the history of Kohlberg, Kravis, and Roberts, and that is a fantastic read. Highly recommended. It will add to your base of investing knowledge. Some things you might not agree with, but you'll find it interesting how they valued companies, looked at companies, and did deals. One thing in particular that I was really impressed by, KKR had a policy, and this is, insider buying and insider ownership is something I've always highly valued. But their very best deals, they encouraged, and by encouraged I mean made, executives at the firms that they bought buy post-IPO a stake in the company. It could be just a few percent or 5%, never much more than 10, because KKR wasn't giving away that much equity to anybody. And that way they had skin in the game, because there were going to have to be cost cuts and divisions sold, and just a whole different way of thinking for a post-buyout company to work and eventually be sold at several multiples. So management was focused, because if this worked, they made millions, tens of millions of dollars. If it didn't work, they lost a lot of money. They were highly incentivized to make the deal work. That's one of the reasons that most of our small banks have very high insider ownership. Many of them have an employee stock ownership plan that also owns a lot of stock. When people have skin in the game, they have a much more vested interest in making sure that the bank performs well and the stock price moves higher over time. That's all good for us. I'm a huge fan of the skin in the game. Loved the term even before Nassim Taleb wrote the book, but also it is a great book. So if you haven't read it yet, do that. So My next up, I just downloaded this last night. I meant to buy it in a hard copy form, but never got around to it. But I'm going to start on I Love Capitalism by Ken Langone of Home Depot. The book has come highly recommended to me, so I'm pretty excited about it. Anyway, what do we have here? The Orioles, we're winning a few here, winning a few there. Machado's playing great. Our pitching is just really sketchy. And somebody was on Twitter the other night, because we won a game and Chris Davis hit a home run. Oh boy, here comes the comeback. Yeah, that's not happening, guys. We are 31 games out of first place. Best we can hope for is they play some interesting and exciting baseball, and we get enough in return for trading Manny Machado, hopefully to the Chicago Cubs, that we can have a team that can compete starting in a few years. We need to rebuild the team. That starts with trading Manny Machado, possibly Zach Britton, getting some great prospects and young ball players in here, and kind of rebuild the team from the team up. It's a horrible baseball team right now. They're going to win a few games along the way. We're going to be lucky not to break the record for the most losses ever by a baseball team in Major League Baseball. So, not a good year. We took the Orioles down, flag down from the front of the house. It was just too embarrassing. But we'll put it back up before the summer's over. But surprisingly enough, we get the local stations down here. We get the Tampa Bay games, and I've been kind of tuning into some of them in the evening. And you know what? They traded away just about everybody on the team that was a big name. Longoria's gone. Just everybody was gone, including people they just traded for last year. And yeah, looked like a rebuild, right? Yeah, they're the hottest team in baseball right now. They're in third place in the American League East, but they've won 8 of their last 10, and they're playing fantastic baseball. There's a lesson in there somewhere on heart and desire, because technically Baltimore looks like it's loaded with stars, and they're not playing up to potential, and we are 5th in the American League East, a cool, calm, and comfortable 31 games back at this point in time. So, big question now, where does Manny Machado go, and do the Tampa Bay Rays trade Chris Archer to increase their prospect base? We'll see. All-Star break is coming up next week. Always be fun to watch, and we should start to see some trading activity pick up as the month progresses. Always a fun time. Means lots of late nights with MLB Tonight for me over the upcoming weeks. So anyway, that's really all I've got down here. Not a lot of news in the banking industry, particularly in the community banking sector this week. So I'll leave you with this. Have a fantastic 4th of July and enjoy what looks to be a great summer across the entire country. Thanks. I'll talk to you guys next week.